we've got our great friend John Carney here, who writes daily for the Business Digest. John, thank you for helping us out on a very difficult 24-hour period. When good men and or women die, it is just the hardest thing to cover, as you well know. You've been in the business a long time. Anyway, having said all that, what you get is a big jump in unemployment, and you get a continued rise in prices, and the markets seem to love it. So I need John Carney to explain to all our viewers what's going on here.
So I think the market is pricing in a productivity boom. They think that we're getting a lot of capital investment. We are going to see a productivity boom. And also, yes, we had some more inflation and some goods inflation, even some things that look like tariffs pushed up the prices. But nothing scary. It was pretty benign. The things that got a lot of inflation in the last report for July, like furniture, we saw furniture move up a lot in July. It was up just 0.1% this month. That adds to the thesis that we're going to get, at worst, a 1-point bump in inflation and not an ongoing spiral. Other things like computers, major appliances, down in price, even though they're subject to tariffs. So what does that tell you? It tells you that the tariffs are not having a widespread inflationary effect. And so I think the market looks at these things and says, okay, weakness in the labor market but relatively benign inflation. That's a recipe for the Fed, not just cutting in September, October, December. It's also pricing in a cut in January. And the odds are pretty good right now, according to the futures market, of a cut in March as well.
Yeah, someone, Dave Bonson, I bumped him in on the street after lunch. He said markets are pricing in a 2.5% Fed funds rate sometime next year. I think they should get to 3% right away, John. In other words, you had all these downward revisions in jobs, okay? The BLS problems, we don't need to go into that. It's been covered. And then you have a big jump in unemployment claims. We'll see if that lasts or not. Some people think it emanated from bad numbers in Texas. I'm not smart enough to know. And you're right. You're getting the one-time increases in the inflation, which was predictable. That you have to see through that, as Chris Waller said on the Fed. So I'd like to see them do 50 basis points.
I think that's right. They should
50.
be.
Boom.
They should be doing 50. They did 50 last September, so we know that Jay Powell is capable of doing a 50 basis point cut. Right.
In September.
At the September meeting. And as you said, those revisions now make it seem like they are much further behind the curve than they thought they were. So they should cut 50 basis points. That would also send the message to the market that they are taking seriously the softness in the labor market. And I think that's right. The balance of risks has shifted. When you look at these, even with all the tariffs, tens of billions of dollars of tariff revenue, we're getting relatively benign inflation numbers. 1.9% annualized since the tariffs began. So and for goods, by the way, this month's number, if you take out cars, the core goods, annualizes to 1.6%. That's pretty benign.
Well, you're only up. I mean, goods rose, they rose a 0.5 point. But you're only up, if I have this right, 1.3% for the year.
That's right, because we had a lot of goods deflation before. It's not very bad.
I'll tell you what, I gave a talk yesterday morning. Don't ask me why, but I do these inane things all these Wall Street big shots, high-priced consultants, private equity from all the greatest firms. The one thing they agreed with me, they didn't agree with me on much, okay, my Trumpian optimism, but the one thing they did agree is there is a business boom going on. There is a CapEx boom, and there's a lot of talk about factories, because factory orders are booming. It takes a couple years to build a factory. But even these big shots who don't necessarily agree with Trumpian policy, there is a business boom going on last 20 seconds.
Absolutely. We can see it in all the investment numbers, and that is going to lead to a productivity boom.
Yeah, it will.
Because the cap investment boom is really a future blue-collar boom. It means that we're going to have more people, more productive. That leads to higher wages and more growth. That's what we want to see.
John Carney, the best of the best. We appreciate it very, very much.